Welcome back, everybody. Uh, Today's topic should be an interesting one because I'll be giving another perspective on how you can trade the one shot, one kill by ICT. But of course, I'm giving it to you in my own interpretation. So here goes. All right, so what is the one shot, one kill, right? It's basically trading the weekly range and catching that trade that goes from the high of the week or to the low of the week or vice versa. So you're looking for that one trade that gives you that one big trade for the week, and that's it, right? So the idea is that if you remember my video on the initial balance and opening range for the week, where Monday sets the opening range of the week and Tuesday is the initial balance. And according to Stacy Burke, we look for a trade on Wednesday, that one big trade on Wednesday. But from my studies, what I found is that that trade doesn't always come on a Wednesday. It can come on a Tuesday, it can come on a Thursday, and it can even come on a Friday. But at all times, what you'll find is that Monday will set that opening range for the week. So the high, the low of the week. So where everything that happens during the week basically is set from Monday's range. So we're not necessarily needing the initial balance for this strategy. We're only going to be using Monday's high and low. So we basically observe price Tuesday, Wednesday, Thursday, whatever happens during the week. Maybe we have high impact news events that will bring price to the levels that we need it to get to. And then look for that confirmation that will give us what we're looking for at the high or the low of the week to say, well, that high or low is now in place. So what we'll need is another correlating asset. So if you're trading EU, you need GU as a correlating asset. If you're trading gold, you need silver as that correlating asset. If you're trading crypto, you can use BTC and so Bitcoin and Ethereum. Or if you're trading the indices, you can use US 100 and US 30. Or you can use US 100 and US 500 or US 30 and US 500, wherever you choose to do that. So the key to knowing whether or not the high or the low has been set for the week is to be looking for SMT divergence. So this is the pattern or the confirmation that we're looking for to tell us that the high or the low of the week is in place. What you'll find is that, I don't want to get into that right now. Apologies. I might confuse you. So you look for that that SMT divergence to tell you that the high or the low of the week is in. Then we look for our confirmations to get into the trade. So whether it's that engulfing candle or a break of structure or break a block, whatever it might be, an order block, however you decide to use, whatever you decide to use to get into your trades, you would then look for that. Because after the SMT, every single PD array that is formed after the SMT is high probability. Note that carefully. Yeah, so after having that confirmation and having gotten into our entry, it's always best to look to take something off the trade at least 50% of the range. So what you'll find is that sometimes price will reverse after getting to 50% of the range and then going back in the other direction. But most times what you'll find is that price will run to the other end of the range, which is the higher low of that weekly candle, and will give you a full range trade. So what I will do is I will give you some examples of what that looks like and give you what the full breakdown looks like. If I do sound, I'm not 100% today, but I made up my mind that I was going to do this video today, right? So here we go. So, all right, so we can start with gold. Normally, I would start with I'm going to I'm going to be giving you examples coming from last week's price action on three different assets. So looking for divergence between gold and silver at the high of the week or the low of the week. I went ahead and drew up the charts in an interest to save time. The price action really wouldn't change, so it's the same thing that we'll all be seeing. So what happened was we had the high and the low. The green lines represent the high and the low of the week starting on Monday. And on Tuesday set a high. Wednesday set a low. Well, another high. But that high didn't break Tuesday's high. But at the same time, on silver, we saw where Monday set the opening range, Tuesday traded above Monday's high, Wednesday traded above Tuesday's high. And in this case here, Wednesday did not trade above Tuesday's high. And it even closed above Tuesday's high here. So that is the kind of divergence we're talking about and what we're looking for. So most times you would have heard that look for price to take the high or the low of the day, the previous day, and then look to take your entry there. But this is the reason why price reverses. It is the divergence. And this is the best ever confirmation that you'll ever get while trading to tell you whether or not price is going to reverse. Everything else is mumbo jumbo. Well, that's what I found. You will find out for yourself. Right, so the SMT immediately tells us that. So where price failed to break the high of Tuesday on gold, but it broke the high of Tuesday on silver. That was an immediate confirmation of price looking to go lower. So if we drop to, for example, the 15-minute time frame, which is where I would have drawn up the charts from, you can go as low as a 5-minute. It doesn't really matter from which time frame you take the entry, as long as you're sure of the confirmations in the price action. So we see the clear divergence in terms of what price action did. We had a change in the state of delivery here. So we had this low, this high, and then price went below this low. So that was a change in the state of delivery. But how do you know which pair to take the trade on? Which asset do you take the trade on? You take the trade on the asset that failed to make the high or failed to make the higher high or failed to make the lower low. That is the trade, that is the instrument you'll take the trade on. So in this case, would have taken the trade on gold. I guess in a case like this where, especially with gold and silver, I know most persons really don't trade silver, but if it is a case that you do, then gold would have been the better asset to trade on this day at this particular time. So what would have happened was this would have been a London trade, and we got that confirmation at the half of the week that price was not going any further. We got the change in the state of delivery, and we even had this breaker block right here. Why I choose this one? It is the beefiest candle of all of these little bearish candles here. We use the beefy candle as the breaker block. And notice how price respected the the closing of this candle. And that would have been the entry to sell. And as I said, you look to go back to the end of the other end of the range, which is Monday's low. And that's exactly what price did in this case. And once it got there, it started to reverse again. So there were actually two trades coming off the low of the week. Well, one off the high and one off the low. But if you notice, there's a huge divergence here because on Thursday, on silver, price did not take the low of Monday, but on Thursday, on gold, price took the low of Monday. And that's a huge divergence in terms of SMT again. And you could have now looked for your entry to buy back to the other end of the range. And it goes vice versa. As you can see, price came back to the high of Monday on gold. It didn't do the same on silver. I hope your eyes are opening up to how powerful SMT divergence is. You may not have been taught this way. I think a lot of people would have heard ICT mention SMT divergence, but really have not taken it seriously. Well, I believe now is the time for you to do so because it is a very powerful confirmation method and giving you really large range trades. It really it gives you directional bias, put it that way. So could have gotten at least 3 or so trades on gold last week if you're trading that much. All right. We are going to go to Bitcoin here, Ethereum here. As I had said, I had gone ahead and marked the opening range for each pair. On Bitcoin, nothing much really happened. This is a case where you would have found that price would have given you a trade back to, there's actually no divergence here. If we really look at it, there's none. So price did trade back to the low of the opening range, which is Monday's low. There's no indication of any, well, yes, there was divergence right here between Wednesday and Thursday's low. So price traded low on Thursday. I can get this right. Just see. So Thursday's price action traded below Wednesday's low, while that's on Bitcoin, while on, I hope I'm not boring you, while on actually it did not break the low. I know I saw a divergence. It didn't break the low, while on Ethereum it broke the low of Wednesday's price action. So to mark that properly, so that's the divergence. It failed to break this low on Wednesday. Well, here it significantly broke that low on Ethereum. So looking back at the same ideas, would have had that confirmation, probably a lower time frame would have given you a better entry opportunity. But as you can see, price basically traded back to, on Ethereum, in Ethereum's case, back to the low of Monday, and in Bitcoin's case, back to around 50% of the range. So that's why it's important to at least take some partials when you get to 50% of the range, having taken this type of trade, right? Bitcoin basically was in a range, but even though it was in a range for that week, there were still trade opportunities present using this concept, right? All right, so let's move on to EU and GU. So what basically happened, it was a large range week for EU and GU. If we were following our rules, we would have been in and out when we were supposed to be in and out. So of the trade, that is. So at the high of the week on both EU and GU, we had the SMT divergence, right? And after the divergence, remember I told you that all the PDREs that are formed after the SMT divergence confirmation, which is the next leg of the SMT, anything that forms after that is high probability. So right here, we had price basically created a change in the state of delivery. We didn't have a close below this low, but it wicked through it. That was still a confirmation that price was still going to go low because of the SMT having already happened. Without SMT, we wouldn't have considered this to be a high probability change in the state of delivery. So even so, this order block held. It could have entered here, or as a matter of fact, there is a very small fair value gap in there that still would have been an ideal entry. That's a 10 to 1 risk to reward ratio trade. And as I said, the one that is the weakest, that's the one you will take the trade on. And price met the target and exceeded the target. So basically a market maker sell model happened here if we're looking carefully. So the low, the high, price came back and took out the low of that previous low, right? So that was one entry from Tuesday. Remember, I said in the earlier part of the video that the entries don't always come on a Wednesday. They can come on a Tuesday, a Wednesday, a Thursday, or a Friday. So we're not necessarily using the initial balance in this case. If you decided to take the trade on the pound, it would have still been a beautiful trade. You had that SMT, you had a nice change in the state of delivery, you had this beautiful fair value gap, and we had this nice breaker block here, which we expect to hold once price goes back to it because of the SMT happening already. And similar outcome, price met the target and exceeded the target. I'm going to look to see if there was any other SMT that could have given the trade back to the high of the week on Thursday. Let me see. And there was, because, let me make sure. Right. All right, so you have what is called hidden divergence. So using the open and the close of the candles, the bodies of the candles. And this would have been the perfect example of that hidden divergence. And that in itself would have also given you an entry. The fair value gap would have held because of the SMT. You would have probably dropped to a 5-minute time frame to see things clearer here. And the same thing applies here. The order block would have held right here. That one. And price went right back to the other end of the range. In the case of, oh, it actually went back to the low. Oh, yeah, right back to the high of the range. And let's see if the pound did that. No, but there's always one leading and one lagging. It depends on what's happening. This was the weaker pair. It failed to take the low, and so it would have moved the most, and hence, which is why it went right back to the high of the range. In this case, it was different. It took the low. A lot of times, we would think that the one that created the stop hunt would be the one to move the most, but you'll be learning today that that is not necessarily the case. The one that fails to take the low or the high and fails to give you that turtle soup or that stop hunt is the one that will move the furthest. All right. I hope that these examples are quite clear. You can always go back and back test this over the previous months. You will find that it is something that repeats, but as with any other concept, it is not an every week thing or an everyday thing. It is something that when it does come, it is a very short trade. And once you follow the steps correctly and apply it accordingly, then you should be looking at really good trades that you may only have to trade once per week, if maybe even twice per month, depending on the instrument that you're trading and your risk and the capital that you have to risk, right? So this has been the big reveal that I should have come with over last month, but due to unforeseen circumstances, uh, life happens, and so things get delayed. But here it is. All right. I hope this is insightful. You're able to apply it, and you're able to see success from this. And of course, as usual, if you have any questions, you can let me know on the Telegram channel, Facebook, or even here in the comments on YouTube. All right. Have a great trading week. Hope to see you again soon. Bye.